All right, hello everybody. This is going to be quite a jam-packed episode with lots of little ideas squeezed into one video. I initially wanted to break this up into three separate videos. One looking at the CME chart to verify that regular trading hour charting seems to be the method of the day. That does seem to dominate technical analysis accuracy and gives an idea that institutions is driving stability into Bitcoin, and that chart does seem to emphasize that. I'll just leave that as an idea here so that we know that we are looking at muted moves for Bitcoin moving forward in future, as it is dominated in terms of trading volume and position of institutions. And obviously they have the ability to do with the price as they please. I also need to establish an idea of the current Elliott wave count that we're looking at, also past Elliott wave count, which then leads me into the primary idea of pitchfork, Schiff Pitchfork, predicting the cycle tops fairly accurately. And then the third video I wanted to make, which I'm going to ignore for now, was actually predicting lows in terms of price, also using pitchforks, but I'll play more with that and do something about that in future. For now, the primary idea is Schiff Pitchforks, determining price tops in terms of price, not in terms of time. And I have three prepared already, measuring from the origin lows, giving us the 2017 peak, the 2021 peak, and then the current 2024-25 peak, and then playing with a prediction of the future peak, which has quite shockingly interesting results. Just to establish where I think we are at the moment is this is an alternate count. I had initially this 126k as an end of fifth wave, but looking at it again, it does make more sense that we actually peaked by the end of 2024 into the beginning of Jan of 2025 using this major 1, 2, 3, 4, 5 impulse. Basic rules are met. 3 is not the shortest, 4 doesn't go into 1. And we have broken down wave 3 into subsequent waves to get our lesser degree wave 4, which I had a video on for potential targets, which I've made a little squiggle here just to see this is what I'm forecasting some kind of price action to be, also based off the previous video. This, I believe, this ABC, which may or may not be completed, to be an expanded flat, and Elliott wave says that if this is the start of the A move into the B, which makes a higher high sweeping the origin highs, and then into a C, the C leg being 161.8% or 1.618, the move of A, and we are very, very near that. And this could open up another idea for us moving forward, another alternative way that this bear market can play out. This is one way I'm seeing the bear market playing out. Another way is if we go back to the 2015 lows, there is two major lows, which I literally just copy and pasted the lows. This is the fractal I copied from here. We are on the logarithmic chart. I'm using the crypto aggregated index for Bitcoin. These lows are near enough. They are the values for the lows, and copying this fractal across, and I'm not trying to measure the size of the moves for upside targets, even though it slightly sweeps this prior low. If we just look at the timing here, first low into the second low, this could be a very interesting target. We could actually then meet this 1618. I haven't drawn this to a T. You should do this with a magnet tool if you wanted. But I'm just allowing this with some tolerance. So I am open to this alternate idea for the bear market playing out to sweep these lows. That will also play into another idea predicting the future price. Now, let's go back to the first fractal one. Now that we've established this, expanded flat ABC, which I think is almost complete or still yet to complete. Very similar move we've had in the past over here. This, I believe, was the peak. If you look at all the underlying macro indicators, Blockchain Back has a fantastic video about this. We firmly believe this was the peak. Also into an ABC, similar story. The C wave plays out really nicely. You've got nice subwaves completing this C as a 335. And having that established, we can start from our origin. So our first pitchfork drawn from all the way the lows of this market. So the way I've been interpreting this is you'll have the completion of the correction on your prior impulsive market, and then there's this period of consolidation, and then I would read this, I use this low, or rather than this low, as I see this as the impulse of the next market phase. This is the end of this market phase, and this is the start of this market phase, with the lows being virtually equally low. It just tends to measure nicely, because we do end up doing this measurement on the next one as well. Now, as you can see, we're starting the measurement using the pitchfork tool that is using the Schiff. I know it says they modified Schiff, but I think it's just because I modified the values here. It's a regular Schiff inside the log chart. Throughout the cycle to the highs, and then to the next cycle lows. And then this using the 0.5 line. So I've removed everything else. The 0.5 line will predict the future peak of the next cycle. Prior low to next high to low, 50% upside target gives you near as damn it the actual peak of that cycle. And then if we rinse and repeat it for the next cycle, like I said, we're using, this is the end of the prior correction of that cycle, which has fully moved the entire value of that price. Starting with that low for the next cycle to the peak of that cycle to the low of that cycle, that is the absolute low of that cycle. We then get, using the same 0.5 extension, the triple top peak, and selling at either one of those points was a fantastic exit of that 2021 cycle market peak. And then using the high of that peak into the low of the following cycle FTX collapse, that then again the 0.5 predicts again the multiple targets of exiting the market: 104, 106, 120, 123, and nearly touches the 126 peak. That is alarmingly beautiful. Now, this is the speculation for the future. So if we use the absolute low of the FTX cycle collapse, and now we know, if we assume that the high is in, the trick is using this high. It's not really a trick. If you use Elliott wave, which I believe this is the correct count, the highest target here, arguably you could use the one slightly earlier if you could include this as part of the corrective phase. These values are close enough. I'm happy to use this value here. Now we have to predict where the low is going to be. If we assume the low is currently in at 60K, where will the 0.5 predict into the future? Now, the time, if you go in the highest time scales, it'll show it to you, but just for ease of reading, I'm going to leave it on the daily chart. Probably in 2027 to 2028, we could be looking at these targets here if this low were to be the ultimate low. Now, shockingly, it's not that high as many people tend to think. 170, 180 maybe. Now, this fractal, I copy and pasted from earlier, the 2015 lows. If we were to see this play out, slightly lower low, a much longer time, that actually expands our time horizon and lessens our price expectation. 150 to 160,000 within the same time frame, 27 to 28. That is, again, less than I think people expect. If we now look at the other video's low expectation, where I hate to use the word black swan event, but market structure dictates that we can retrace into the fourth wave of a lesser degree, which will put us in this vicinity, high 30s to low 40s. If we then put our pitchfork down here, and that timing wise does put us really nicely September, October. Now we're looking at, I don't know if you want to call this a double, triple top, whatever. It is, yeah, 127. This is just matching that high. Again, not spectacular results, but this is an interesting idea. I needed to put this out there because I will probably forget it, and I'm going to keep track of it. We have pretty good alternative scenarios all put into one here, and whichever one does tend to play out, we'll keep running with that. Thank you for watching.